Hi traders, welcome to this live currency strength indicator table video with me, John, on this Tuesday, the 3rd of October. I've waited around a little bit today, to be honest. I've tried to see if we got any kind of developments in terms of correlations on the two tables, but nothing's really changed. The dollar, very dominant. We did get some data yesterday, was the manufacturing PMI data that came in better than expected. That saw the US dollar strength continue. I was hoping to actually see cable appear because cable is one of those ones that we did like the look of for potential downside, but we didn't really get that. Aussie has come on the tables. We actually had some data overnight. If we go and have a little look here on our live economic calendar, you can see that the RBA held interest rates at 4.1% in line with expectations. The Australian dollar has weakened off the back of that, and it's now the top currency pair on our day traders chart. Again, was waiting to see if we got some kind of confluence on the trend traders and the day traders. We just haven't had that though. So at the moment, it's just dollar really dominating the market. If you have a little look at what's coming up for today, we've got the US JOLTS job openings coming up at 3 p.m. So that's obviously going to affect the US dollar going into today's session. It is expected to come in a little bit lower than previous. It says 8.827 million on the previous here, forecast 8.8 million, so a little bit of a decline there, so that could affect the dollar's position. However, what's really taken off in the markets is the US bond yields. You can see that the 10-year yield has now finally kind of given up those 4.1 highs, 4% highs, which it really kind of tried to maintain for the past few months. This is a monthly chart, and we were failing to kind of trade above that point. It was also the high here back in July of 08, but it's finally given up now, and we've seen a break through these previous highs, a break below these lows that formed back in December 06, and it looks like we're heading up to the potential of 5% here on the yields. If that does happen, then that dollar strength will continue, and if we go take a look at the US dollar index at the moment, we're trading above that 106 prior sort of yearly highs which formed back in March. We're well above that now. We're currently trading 107s, looking to see potential targets up into the 108s there. That could obviously coincide with those yields coming up to that 5% mark. What does that mean for across the board? Well, it means that we should be looking for our major currencies to decline. I've got euro, US dollar here, for instance. We are bearish. We did kind of talk about this previously in the past, that we were breaking down this 1.06 level, the next levels of support we pointed out, but you can see here very aggressive bearish moves, and here we're now closed below the 1.05 handle as well. Will that continue to see price drop to the downside? I do have a level down here around about the 1.0375 and about 1.04 as well. We could probably put a zone in there, but that does look likely to continue. Now what I'm doing at the moment is just looking to see if we get a decent pullback actually. We've got euro dollar here, for instance. We're coming back into that 1.05. I'm also watching the stochastic. If we can get any kind of breaches above the 80 here and then a close back below, ideally I would like to see price maybe at the 50 MA as well. If we can get some kind of correlation or confluence at that point that the potential for the market to continue lower is there, then I would like to see a potential move at that point. At the moment, momentum on this lower time frame is bullish according to the stochastic. I don't think this market is necessarily bullish at the moment, obviously because of what we're seeing from the higher time frames, but obviously I don't really want to get in at these lows. I want to get in at a higher price, so I want to see price try and pull back up a little bit. Maybe a 1.05 break would try and influence some buying as well, because that could obviously get some trapped buyers involved, and the selling pressure might be quite strong after that. So I wouldn't mind seeing some kind of push into this level here and a bit of a breakdown. You have a little look at cables continue to push lower. We actually came into a nice trend line resistance in here on Friday. Obviously I wasn't here here, so I wasn't able to catch that move there, but you can see the confluence between the trend line resistance, the resistance looking left, and the stochastic. If you manage to catch that move there, that was a nice move to try and be a part of. Again, very similar here. I want to see some kind of pullback. Whether we get it or not is going to be a different question, but if we do get some kind of pullback, maybe back into that sort of trend line resistance, the 1.2175 resistance, I wouldn't even mind seeing something like this on the stochastic. Then I would be looking for further downside. Again, hourly chart, the 50 MA is in a really nice spot at the moment, around about the 121.50, which kind of looks to be within this previous area of consolidation. So like I said, I don't mind that sort of pullback happening as long as we get that sort of 50 confluence in there, stochastic confluence maybe. That could be ideal. You can see when we do get that sort of confluence in here and then the break of that, the market did start to push a lot lower. So I want to see that again. I want to see those same confluences line up, see if we can get some kind of reaction from key areas. Another currency that's pretty weak at the moment is actually the Canadian dollar. I do quite like CAD to the downside, although it does appear here on our trend traders as S3. GDP out of Canada last week actually came in lower than previous, or lower than expected at least, and CAD reacted pretty poorly to that data. We were long CAD Swiss previously from this area down through here. I think it was here actually. We were long down through here. We ended up targeting at the 1.6726. I mean, price rallied much higher after that into our next level of resistance, which was the 1.68. But since that sort of trend line breach, since the break back below the 50, the retest of it, we've been trading lower here. Now CAD and Swiss are both weak, so you know that's what I'm just kind of highlighting, that CAD is pretty weak. So I like the idea of potentially dollar CAD longs. I was looking at the daily chart and we can see something that's quite interesting. We've got this trend line resistance formed back on the 13th of October with a test on the 10th of March. We're now getting the first test here, and if we breach that level, it could mean that price is coming to the next level of resistance, which could be up here at this 138.30. We could probably round that up to 138.50. To be honest, let's just do that right now while I'm speaking to you. So yeah, that could be a level that price comes to target, and if so, could we get some potential opportunities here? I'm still kind of eyeing up something. Again, would I like a deeper retracement? Absolutely. It's just whether we're going to get that with this kind of dominance of the US dollar at the moment. Looking at the dashboard that Charles sent me this morning, I can see that the yen strength's actually come in. So we did take a look at Kiwi yen yesterday. We were looking at the potential for the 4 hour to form an opportunity for us at the 89. It didn't happen. Okay, so price just completely traded through that level. It broke down through it. We didn't get any kind of opportunity around that area. Price has now traded through trendline support. This move higher is off the table for me now. I don't see price climbing now. We did kind of say that yesterday's video. We've got to be super careful. One thing that put me off was the fact that we didn't close above previous highs on the 5th of July at 89.70. The other thing that put me off as well was the fact that US dollar yen was at 150 pretty much. You can see in here. Now that doesn't mean that obviously dollar yen's going to fall, but being at such a significant level, we could see obviously that yen play coming in. We also had a little bit of data out of China, saw a little bit of slowdown that might have fueled a little bit of a risk off sentiment in the market, and yeah, that risk off is now looking like it's in play. CAD yen actually was something I was interested in because CAD's a weaker currency, yen getting stronger. If you have a little look at this from a weekly chart, you can see why I'm interested in this market in particular, and that's because we rejected the 110.30, which were the previous highs that formed back in here on the 12th of September 2022 and the 17th of October 2022. Look at the reaction that we had. Price tried to trade through it. We got to the highs of 111.14, and then we closed back and below. If I just zoom in a little bit more, you'll be able to see that in a bit more detail. And that to me was a a real significant bit of price action at that level of resistance. I actually thought from that we'll see potentially a move back down, and I've identified these highs in here as a zone of interest for me, which is around about that 108 handle. If the 108 handle, you can see it sits nicely through that zone through there, so I quite like the idea of price coming back to the 108. So I am actually eyeing up potential shorts on CAD yen. Obviously that's not particularly on the chart, on the tables in terms of any correlations, but you can see there CAD yen being the second strongest currency, CAD the second weakest. We could see obviously some potential downside here. We have just tested lows of the 109 spot 20, these lows back on the 21st of September. Very similar to what I'm looking for though at the moment. I'm looking for price to kind of pull back a little bit. The 110 handle is quite interesting because it's kind of these lows in and around there. Again, whether we get the pullback is a different question, but that's something that I would ideally like to see. I'd like to see a decent pullback, a continuation to the downside, targeting the 108 level, which you can see has obviously been a very influential level in the past. So I want to try and target that if we do get any kind of moves there. What may happen is if we do get any kind of pullbacks into the 110, at that point CAD yen could potentially appear on the tables, which then would give us a better idea. If we get some kind of bearish stochastic move as well, then I think that would be really ideal to go looking for that short. So although we've only got the US dollar here as a correlated currency between the two tables at the moment, there's still some opportunities that we're eyeing up. I do think cable's still a good one to watch for that downside move. Obviously euro dollar is going to be one to watch as well. Continue to watch those. Dollar CAD is another favorite of mine, but we don't really see the pullback happening just yet. And keep an eye on CAD yen as well, could be one to watch in the future. Thanks for watching this video update. I really hope you enjoyed it, and I'll catch you in the next one.